What's going on, everybody? It's your boy C-Zar, and we are talking about Bitcoin today, BTC USD. Hit that like button, subscribe. Thank you all for being here, and let's get into it. Okay, it's the 25th day of June. Here we are at about $61,000 with roughly 3 days, 12 hours left in this week, about 11 and a half hours left in this day. 61.1K being the price, and we've moved up. A lot of people are falling into the trap of this being a double bottom. Now, let's be fair. It could be a double bottom. It's completely possible, but everybody's thinking that it is, which to me means it probably won't be a double bottom. It looks like a double bottom now until it doesn't. And then when it doesn't, that's when it will likely move up. That's likely when the recovery will happen. I still believe, and ultimately what I do believe is that this move down here is generating a significant event that will cause us to move sideways over time. Okay, in that sidewaysness, we will see higher highs. We've also projected that we could see lower lows, right? At first, we were kind of doubtful that we'd get to lower lows, accepting of it as a possibility. But then, as we got to this phase here, we were very much calling for the idea that we'd go to lower lows. There was just a lot of long positions that would be cleared out here. Somebody said that, oh, there's only $3 billion. By the way, it was like $5 billion. It actually added, but somebody's like, only $3 billion here. There's $20 billion in short positions. It's like $3 billion is a lot of money. You compare it to 20 billion, yes, it's less. It's still a lot of money. The market makers can, and the exchanges, they can push the price down, hunt those stop losses, hunt those liquidation levels, make money on the way down, and then make money on the way up too. They can have their cake and eat it if they really want to. Oh, and they do. They really do want to. Anyways, just as a thought there, and I haven't updated this, I think, since that day. Somebody was saying, "Oh, look at this. There's so many shorts. All these longs here. There's just not nearly as much. We must be going up because of this. It's going to get you in trouble. It's going to get you in trouble. That's all that I'm saying here, guys. It'll get you in trouble if you think that way, okay? And using the yearly, I don't think is helpful. Personally, not financial advice, not a financial advisor. First and foremost, CoinGlass, their data is not completely accurate or representative of what's going on in the markets. It's close. It's a good approximation, but understand it is not perfect. Second to that, I don't think looking at the yearly helps. I really don't think looking at. I think the 30-day and less is what helps, and that's why we really only look at the 30-day and less. And guess what? Even on the 30-day, there's still about $2 billion worth of longs to get liquidated at $58,000. You don't think we'll move down there? We could. We really could move to 58. We might even move lower if the longs keep piling on. It doesn't matter if there's more shorts than longs. I mean, that does matter to a certain degree. But we can keep, if longs keep piling on, the price will keep going down. It's fuel to the fire. And until that fire is extinguished, we're going to keep moving down. And once that fire is extinguished, then we will move up. There's a lot of shorts. There are a lot of shorts, and a lot of those get cleared out at 63K, 68K. You know, I could very much see us going to 67 to 75K, somewhere in there over the next month. I really could see that happening. I still don't believe that we're at the end of this bear market. I don't believe that we're ready to bounce right now and go up higher. But you know, we could have a double bottom here. We're going to go over that in the short term stuff. I just wanted to go over this and give you my thoughts on that as far as this long to short stuff goes. I mean, there are a lot of longs right now that get cleared out at $60,000. There's far more shorts, but I digress. Anyways, the general idea overall is this event caused an area where we will be consolidating. In this consolidation phase, I've declared that we will see higher highs, that we could see lower lows. It doesn't matter. Really what's happening is every pump dumps, every dump pumps, and blah, blah, blah. That's the idea. We're doing more of this kind of stuff, more of this kind of stuff until late July or sometime in August. That's my expectation. And when we break out of this consolidation phase, down is the directional heading that I would expect. Anyways, looking at this on the 1 hour time frame, having a little bit of a green hour right now. We did move up. We moved up from our low, a very harsh low with a lot of volume here. We moved up and we found resistance, didn't we? Right there at prior support, from which we rejected. We've actually gone up all the way this hour. Wow, when did that happen? Did we just do that? Yeah, we literally just did that in the last 15 minutes. Probably hunting some stop losses or encouraging FOMO for the long positions. I don't know. Maybe we do move up, but what that looks like to me is just a second kind of bull trap, secondary bull trap. This is your bull trap here. This is your secondary bull trap here to get anybody to FOMO who is thinking about it. We're probably going to go lower, guys, and I'll go over why I think we're going lower in just a second. It'll be very clear. If you believe in the fibs, the Fibonacci retracement tool, the same way that I do, it's actually very clear as to why we're going to go down. We look at this from a low here to a high here, and the fact that we are rejecting, okay, so this white zone is the golden ratio zone. We found support on it here, moved up to the 236, and then came all the way down to the golden ratio. We found support on it here and then broke through. Okay, it's a significant level. We came back up, and now we're finding resistance at it. Okay, we're coming back down. Now we're finding resistance at it. Makes me think, it really makes me think that this target area might be where we're going to. And that target area is between about 57K to 54.6K. That is the primary target zone on your fib extensions, the 1272 to the 1618. And if you told me that we were going to go down there from this high or even from these levels, I would have said no. I don't really bet on that happening. But right now, it seems rather possible. Okay, and I could be wrong. What would it take for me to be wrong? I think if we could close today above the golden ratio, if we could get above 62.1K, at that point, I'd wave the white flag of bearish surrender. I'd say, okay, I was wrong. Yeah, if we can close one day, today, tomorrow, whatever, before we get lower, if we can close above 62.1K, then I was wrong. Then from there, maybe we actually do have a double bottom and we can move up higher. We officially will be moving above this high and likely moving to prices that are around 70K or higher if we can get above 65.3K. We get above 65.3K on a daily closing basis. This is a double bottom, absolutely, no denying it, and we will be moving likely around 70K, if not even up to like 75K. All right, let's get back to the short-term stuff. 1 hour time frame. But that golden ratio rejection here, guys, that's really what's building out a case in my opinion. 1 hour RSI. Here you can see you're starting to form a little bit of a bullish trend, right? You've got higher highs, but just wait a second now. Higher highs with lower highs in the price. That's hidden bearish divergence. It's a bad thing. It's not a good thing. You look at the price action itself, volume building as you're dropping. There's no volume coming here to save the day. In fact, volume's dying off as you're moving higher. You're finding resistance at prior support. You're finding resistance at the golden ratio zone. I wonder what about this relative area here, even from a high to a low. That's the golden ratio zone there that you're finding resistance at. I mean, it doesn't look good. It doesn't look good on the 1 hour. We'll just say that. Stochastics kind of look good here. 22 minutes left. Let's see how this hour closes. But for right now, it almost looks like you want to find support at the 50, which you could move a little higher. Maybe you do. I've already given the parameters to make me wave the white flag of bearish surrender. That doesn't mean the low is in, by the way. That just means this is a relative low. Something to build off of. Maybe we do go higher. If we get above what was it, 62.1K with 62.3K, what was it from a low to a high? 62.1K. Yeah, we get above there on a daily closing basis, $62,130, let's say, on a daily closing basis, then this might be a double bottom and we might be moving up. But until then, there's really no evidence that suggests that, and everybody's so eager to call this a double bottom. Just like they were eager to call this a double bottom here from here to here. Now it's looking a bit more like what we were talking about before, right? Do you guys remember? I was talking about how when you find support at something, typically you find robust support. We found robust support. And then whenever you come back down to that level, if you're going to bounce and you're going to get a double bottom, you find robuster support. It's even more robust. This is where your W patterns come in. It's phenomenal. It's great. You don't spend a lot of time down here giving people an opportunity to buy before this magnificent move happens. That's typically not what happens. But if it's not a good thing, what you'll do is you'll find support here and it'll be less significant. Oh, and then it'll be even less significant and less so, and then you break down. And this is where your descending triangle formations come in, right? And not that this is the same look because this is so far spread out, but here you can see we had a very robust bounce. Here we had even more robust bounces than we're having now. This bounce is pathetic compared to that. This bounce so far is pathetic compared to that. If this is the high, today was the high of this bounce here, we're doing exactly what I've been saying over the past few months, that if we bounce here, and I say past few months, I'm sorry, would it be on the past few months? It'd be really something that we've been talking about since the beginning of this month of June. If we bounce here and we see a weaker reaction and a weaker reaction, that likely means that we're going to go lower than this level, right? We're going to go below it. Now, fake outs exist. We could go below it. That could be true. And it's a fake out, and then we rip. Awesome. Maybe we rip and it's a lower high, and then we inevitably dip back down. That's also possible. Maybe it's the real deal and we're getting on with our bear market finale right now. That would be crazy, in my opinion, but anything can happen. Let's look at the 1 hour time frame again. Look at our indicators. RSI is bearish, right? We know it's bearish. Getting oversold, you're not getting overbought. You're at the same areas that you found resistance before. You have higher highs in the RSI, lower highs in the price. That's bearish. That's hidden bearish divergence. It's not a good thing. It's typically think of it like this: bears, the same way that whenever you get overbought, you're exhausted, right? You're too hot. You need to cool off, and then you can come back up, right? You're getting lower lows in the RSI, but you're getting higher lows in the price. It's hidden bullish divergence. This cooling off allows you to continue to grow. Same thing here. You're cooling off. This allows you to decay more. That's all it is. Okay. I would say once we start seeing the 1 hour RSI getting either a bounce, rejecting the oversold zone, or just at the very least getting higher lows in the RSI while getting lower lows in the price. Whenever we see that, and we also see as we're dropping down in price, we're getting less volume. When we see that kind of stuff, then we can start getting excited that a low is in. Okay, maybe when everybody stops calling for a double bottom, then we can start getting excited that the low is in. And again, when I say the low, I mean this relative low. We are not at the bear market low yet. The bear market low is a different thing. It's a different beast in itself. Stochastics kind of look interesting here again. But if we come down in the next 18 minutes and close this bad boy red, I don't think they'll look as interesting. It'll look more bearish. So we'll see. Sometimes you look interesting for a moment and then inevitably you dump. So, however it works. MACD is bearish overall. You built bullish momentum here, stronger bullish momentum than you've seen over the past week or so now. Got higher highs in the histogram with lower highs in the price, hidden bearish divergence, and your oscillators here are right around the zero level. This is a perfect level to reject and come down as well. 4 hour time frame. Lower highs, lower low. Lower highs, lower lows. Bearish. Right. Let's see. We're oversold here. We were oversold here technically, but we rejected the oversold zone, right? Still, we got oversold. We didn't get overbought. We're getting oversold here and not yet getting overbought. Again, we have these higher highs in the RSI while providing lower highs in the price. Hidden bearish divergence showing its head on the 4 hour as well. On top of that, we look at the last time that we really got oversold, not here, but here. Were we in it and out of it, and then that was it? Or in it, out of it, and then that was it? We just went up higher? I mean, I guess when we did get out of it, that was it, to be completely fair. But really what I'm trying to get to is we formed bullish divergence first. We had higher lows with lower lows. As we were dropping down, actually volume picked up, to be completely fair. We saw a lot of volume at the lows, though. Anything can happen. You can find a low with a lot of volume. You can find a low with low volume too. We're kind of I would be looking for low volume in this case, but anything can happen. If we get high volume, we're likely going to break down a lot lower. We're not just going to get that fake out low. It's going to be probably significantly lower. Anyways, the stochastics, RSI to me looks bearish. I would expect that we come down, we form higher lows before seeing any kind of recovery first. The stochastics look bearish here. You're at the 50, you very well could reject. Now, if you continue this, if you can close here or higher on this 4 hour candle, we have 3 hours, 16 minutes left. If you can, provide some growth and maybe close above where you are now by the end of the day, the stochastics might look good. And again, starting to really build the case that the low is in here. I would think that if you could close the next 2 4 hour candles green, that would allow the stochastics to go past the 50, and that actually might allow you to get above that 62.1K area, and you really start to look like you have a low here, like a double bottom. Then at that point, I'll become bullish. Until then, I remain in my bearish stance. The MACD is building bearish momentum. Right now it's decaying, but it is building bearish momentum. Until we get bullish divergence on there, the MACD is not really helpful. I mean, it looks bearish to me, right? We came down, crossed below, rejected the zero. Now we're looking like we want to go lower. Not bullish in my opinion. We look at the daily time frame here. Daily time frame, again, this double bottom appearance is there. It's there. We're also about to cross red on the daily MACD. The stochastics do not look bullish at all. Getting dramatically oversold, rejecting the overbought zone, not good, right? Definitely not good. Um, and then the RSI rejecting the 50 coming down. I mean, to me, it looks like you want to go to the oversold zone. You're just not. It's not that you can't bounce from here. You absolutely can. It's just the signals to me look more bearish than they do bullish. What do we got over the past day? I mean, guys, come on. Like, over the past 24 hours, more longs have piled on than shorts. I don't think we're at the low, man. I don't think so. $2 billion in longs. See, this is what I mean by it's not helpful. You go over the last 7 days, it says that there's only $1.74 billion piled on. You go over the last day, it says $2 billion. To me, that doesn't make sense, right? I don't get what the why that discrepancy is there. Um, how can there in the last 24 hours be $2 billion in longs, but the last 7 days there's less than 2 billion? It doesn't make sense to me. Maybe that's how many positions have been held for the last 7 days, whereas this is like how many have been held for the last 24 hours. That also doesn't make sense because over the last 24 hours we creamed the longs. I doubt these longs are from the last, like before the last 24 hours. I bet these are within the last 24 hours that these have been created. Um, but anyways, I digress. You know, a lot of shorts get cleared out at about 62.7K, 62.8K. It's very important that if we get above 62.1K that we close above there, that we don't just wick up there and then come back down and close below. If we do that, all we're doing is stop hunting these short positions, and then we're going to clear out the longs as well. But there's more longs than shorts. There's 2 billion longs, 1.5 billion shorts. There's a lot of cheddar both ways, and it gets bigger as we go up for sure. But there's still a lot to go to the downside until we stop longing as it's going down. We're going to keep going down. It's literally throwing gasoline on an already robust fire. We're probably going to keep going down. A lot of these longs, guys, in fact, this first island gets cleared out at 60K. We're at 61.3K now. The entirety of these positions really gets cleared out at about 58K, 57K. It's looking like a possibility right there, in my opinion. 57 to 58K. And again, we look at this on a 4-hour time frame. You take this low here to this high here. $58.3K, 57.4K right there, primary extension zone. We take this from the low on June 5th to the high that we had on the 15th of June. 57K to 54.6K. Anything and everything between 58.3 to 54.6, I would say is fair game right now. If you're looking for a fake out low, this is your target area. If we're looking for the real deal with these extensions, that's the target area. There's not enough longs to suggest this target area. And the way that I think that the market's going to react if we see prices like right now, the market's reacting in a very predictable way where people are trying to bet on this double bottom. But if we go down here, even as a fake out low, I don't think a lot of people are going to go long right here. I don't think a lot of people will because now that double bottom is gone, and it's a perfect kind of setup for a fake out low. People will go max bearish here. They might even add some shorts, right? Because now we're breaking out to the downside, and then we move up. We just throw everybody off. You move up. Oh, it's just a lower high, and then we continue to move up. But I digress. I've given you my thoughts. I don't have anything else to say. This video went on much longer than I intended it to. Did we didn't even go over the indicators, did we, on the daily time frame? No, we did. We did. Okay. Weekly time frame, yeah. I mean, 3 days, about 11 hours left. This week is only down 3%. We very well could, especially with the double bottom idea, by the end of this week, we could close green. If we close green enough, this MACD will not be crossing red. However, if it does cross red, that is a tremendously bearish signal. And to me, that signal would strongly suggest that we are nowhere near the bear market low from a price perspective. I guess we're near it from a price perspective. I guess from the high to the low, we're probably more near it than we are farther away from it, right? But this is not the low area is all I would mean by that. We'd probably go down to something around 50K, just below, just above. That'd be my expectation. 55K, 43K, somewhere in that range overall, but I think closer to 50K makes sense. For a while there, we were thinking, 55, what was it, 57 to 50K. We've shifted that over the weeks, over the last month and a half or so, I think, to expecting something that's probably around 55 to 43K. I think that's the acceptable target range. Anyways, I've got nothing else for you guys. I hope you enjoyed the video. Hit that like button, subscribe, take care of yourselves. Can we go below 43K? Yes, we can. Do we have to go below 55K? No, we don't. You know, for all we know, this could be the bear market low. I highly doubt it. Who am I? I've been in crypto since 2015. I've just seen a few bear market lows in my time. But that's my opinion. I can be wrong. I've been wrong before. I'll be wrong again. Take care. See you on the next one. Bye bye.